Hey everybody, welcome to Afternoon Market Action. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's also Western Wednesday. Hashtag Western Wednesday VV. If you can hear me, by all means, please respond in the affirmative, preferably with VV Nation, and let me know that I am coming across loud and clear. I actually like this hat a lot. This is one of my new hats. I like this hat a lot. The way that it bends and it feels and all that kind of stuff. So, yes, I do have my boots on. I'm not showing it to you. I'm telling you, I got boots and I got jeans. I am so not going to show you my boots. Just not. It takes like 11,000 seconds to show you my boots. Right, Joey? I'm not trying to show you the boots. All right. E10 says, loud and clear all the way to Israel. Looking good with the hat, Glenn. Thank you, Michael. I appreciate that. So let's go see how many people we have here. You know me, today, still interesting day in the market. Big difference from yesterday. And I'm going to talk a lot about why that's going on. The volatility in the market is just atrocious. It is atrocious. And it makes it hard for anybody to consistently stay on the right side of the market. Well, you know what this is? This is a trader's market. This is more so a trader's market than anything else. You take what the market gives you. You know, you join our Jockey Club, which is our live day trading room, Monday through Friday from 9 a.m. to 10:30. And these are the times that try men's souls. And these are the times that try people's portfolios. So keeping all of that in mind, this is definitely a trader's market. You take what the market gives you on that given day. All right. It's tough to hold longer unless you're like me. I'm playing contras. I've got 2 long stocks and I've got 2 contras. On a day like today, my contras are really rocking and rolling. They're really rocking and rolling. There you go. Michael says Credit Suisse largest investors said it could not provide the Swiss bank with more financial assurance. Is that what it says? Why can't I move that? I got my picture there. I can't move it. Financial assistance. All right. So we're going to talk about that as well. I think we're going to do what we did on Monday. We're going to concentrate on what's going on in the market, how to best take advantage of what's going on in the market. Got some chip news, got some oil news, no gold news. Remember, somebody was, Mr. Mex Biker, are you here? You were talking about, hey, is it time to get into gold? And what did I say? I said from a day trade or short term, absolutely. But long term, I'm not ready to go back up the truck and put money into those precious metals, whether it's gold, silver, or copper. Not yet. Hello, VV folks. You too, Glenn. Thank you, Greg. I appreciate that. Let's go. I got a VV Nation mug. Wait, you know what I'm going to start doing? I'm going to, and Joey, can we use the Connect page to get people to send me pictures of them in their VV swag, or we want to do it a different way? It's a good discussion to have. They can send it to connect@vectorvest.com?
Yeah, or they can put the hashtag anywhere.
All right. So put the hashtag in the room. It should be, or I'll do it. Hashtag, well, that's not for VV. I don't want to do it for Western Wednesday. I just want to, what hashtag you want us to use then? I know I got that, Craig. I'm going to talk about that today too. What hashtag you want me to use?
I thought you wanted this for Western Wednesday.
No. This one, I want pictures of you guys in your VectorVest swag, whether it's a cup, whether it's a hoodie, or hashtag VV Nation.
Yeah.
All right. So if you guys are willing to do so, send a picture of you guys in your VectorVest swag. All right. No matter what it is, send it to connect@vectorvest.com. Send us a picture with a hashtag VV Nation. Uranium, I just did a story on uranium news coming out that we just put on a reactor in the United States, the first one in 7 years. I think it's going to be a big boost to uranium. So how many of you saw the CCJ video? When did it come out? Last night? It was last night's video?
Yes.
How many of you, type of 1 in the room if you saw the CCJ video? Man, I think that that news could be really big for the uranium spot. All right, which is why I did that. I don't have anything. I need a hoodie. Alberto, well, you got to, if you go to the store, you can buy a hoodie. Alberto, that's the beautiful thing about it. Whether you win or not, you can go to the store. You can go to the store and you can buy a hoodie or a cup or whatever makes your heart flutter. All right. Trend is mini reactors. You don't need to put up a full-blown reactor nowadays. I'm with you, Drew. And I think that more countries are going to go down this path. Like last year, I did a video on countries who are moving more towards bringing up more nuclear plants or reactors. So I'll put that up there. All right. So we got 196 people. Let's try to get 300 people in the room. Today's live stream is going to be hot and heavy. We're going to be going through a lot of stuff. So invite your friends, get them here. Let's get them rocking and rolling. And with that, let's start off. What do we see on the market? A lot of red in the color guard. All right, which makes sense. Which makes sense. And I think we stay in this area until the announcement next week. We're going to talk a lot about what the Fed should do. And even my mind is changing a little bit. You want to see what I'm thinking, you stay here. All right, you stay here. Even my mind is changing a little bit, especially with what's going on with the regional banks. Real quick before we move on as well, today's live stream and tomorrow's live stream are going to be my last two live streams for about a week or so as I head off on vacation. There's only going to be one live stream next week. It's going to be Thursday. I am already recording 3 videos for the Monday video, Tuesday video, and Friday video. So we're still gonna have 6 p.m. videos on Monday, Tuesday, and Friday. But there's only going to be one live stream. Steve Chappell will be filling in for Trending Thursday with a special treat for you. So you don't want to miss that. You don't want to miss that. Ravi, howdy. How you doing? Yes, I'm cruising. I'm going to Belize, Roatan, and Cozumel. 7-day cruise, my first cruise, my wife's second cruise, and we're on Norwegian. We got a balcony, the whole 9 yards. I just want to eat 24 hours a day, 7 days a week. That's what I want to do. That's what no, it's not a 3-hour tour. I'm not taking a 3-hour tour. I'm not ever taking a 3-hour tour. Because you'll end up on an island and they will never find you. When are you coming to Sweden? Ooh, Dan, my wife wants to get to Sweden and to France and to Greece. Maybe I've been to Norway, Dan. I've been to Norway for cold weather training while I was in the Marine Corps. So I've been to Norway. All right. So with that, I just wanted to get some of that out of the way just to let you know. No, Claude, no 3-hour door. Yeah, double bake. No. A bacon double cheeseburger at 3:30 in the morning is what I'm going to do. A bacon double cheeseburger. Michael says, love Belize and Cozumel. Have a great time. Watch out in Mexico. Listen, I can't carry while I'm over there, but that's all right. I know some kung fu. I know some kung fu. So I've been there. Say hello to Gilligan for me. No, there's no 3-hour tours. All right, let's get into the program. Let's start talking about what's going on in the market. Let's start off with today. All right, we're going to get into the news for today that's moving the markets, but this is today. At the open at 9:30, look at the move down. Since we've, in the last hour or so, the market's trying to make a little bit of a run. But until we can take out the level of the gap down that we had this morning, this market's got no legs to the upside. It's got no legs to the upside. The last few days have been a reminder that monetary conditions are too tight for financial assets at these valuations, but too loose for secular inflation. Dan, you hit the nail on the head when I'm in that statement, because my thinking in regards to inflation and in regards to interest rates are changing just a little bit. All right, and we're going to talk about that. Claude says, forget Gilligan. Say hello to Marianne and Ginger. Claude, you shouldn't be saying that. But since you said that, I'm going to go.
I love it!
All right, so that's what I think about that. All right, what cruise line are you taking? We're going to go Norwegian. We're going Norwegian. My wife liked it when they went to Alaska, so she booked us on Norwegian. So here's today. Let's look at the last 3 months. Wow. I already had set up levels of support. People were asking me, where could this market go? I had a level of support sitting at 54.68 on the VectorVest composite. My next level of support is sitting at 54.42. We're close to it. And then my last level is sitting at this low right here of about $50.73. Now, something else that I want to talk to you about in regards to even trying to play the market to the downside. Is it too late? And that's a question that everybody has to ask themselves right now. Is it too late to get into the market on the downside? Type a 1 if you think it's too late. Type a 2 if you think that you can still play the market to the downside. All right. Type a 1 if you think it's too late to get in on the downside. Type a 2 if you think we've got a little bit more downside to run into. All right. I'm just curious to say that could have been a good poll question. Sorry about that, Joey. A lot of people are typing 2s. A lot of people are typing 2s. All right. As a VectorVest subscriber, let me show you some things. The MTI, which looks at 3 indicators, price, RT, and the buy to sell ratio, sitting at a level of where the market is looking for a bottom. Normally when it gets down, and it can stay down there for a minute, but afterwards, what tends to happen with the market, it rebounds. We didn't quite get there here, but we are here now where the level is looking for a bottom. There you go, Marty. All right. But notice here, the pullback, we went way below the 0.60. We meddled around and hit another low before we took off. All right, so keep that in mind. Look at the buy to sell ratio. When it gets to a level of 0.20, the market is looking for a bottom. Okay, last time that happened, look at that. Below the value, market took off. Below the value. Now look at the buy to sell ratio. It could sit at that level for quite some time. The MTI looks like it will respond a little faster. But by way of being a VectorVest subscriber, both indicators are letting us know that the market is looking for a bottom. Now, let me add a little something to that. We know that the Fed is going to bring in his decision for the Fed rate, the interest rate next week. I think with all of this being said, we stay at these levels, very close to these levels. The market still does have some downside. Do we get a quick bump up? Absolutely. But I think that we use this level of support of 53.43. We look at the indicators. Do we have a little bit more downside? In my mind, I think we have a little bit more downside left. Rick says 61 probability for no hike. Yeah, we are going to talk about that. All right, so the Fed is getting ready to, give a decision on rate increase or not. Let's go to the news. All right, because there's a lot of stuff going on in the news right now, and that could affect what the Fed does. All right, U.S. inflation cooled in February as Fed confronts bank failures. All right, so why is that important, and how does that affect the interest rate? A lot of the banks, and I still think that there's another shoe to fall. I don't think that this is over yet. I think there's going to be more banks that are going to fail. Okay? I'm putting that out there. A lot of these banks bought the debt. They bought bonds. All right? Kim says, Glenn, are you just talking about bump up before we turn back down? Yeah, I think that we get a little bump. I still, I think that markets can't go down exponentially forever, just like they can't go up exponentially forever. Do we get a little bump before we go back down some more? Absolutely. All right. It's a bump. I don't think it's a big increase. Okay. Look at yesterday. Yesterday we had a little bump to the upside after the day before the world went crazy. The world went crazy, and then we got a rebound, and then reality sits in. That's what we got going on. So next quarter, banks will be taking reserve for bond. Hold on. Let me get through this first. Okay. So the banks went and they bought bonds when interest rates were low. Now that interest rates are high, when they go back to sell, they're getting killed. I still think that there's a lot of regional banks out there, as well as big banks. Originally, I didn't think that the big banks were going to be as affected, but they will be as well. But I think that they got a lot more other things going on to protect them to a certain degree. These regional banks put a lot of money into buying the debt to get that small return on their investment. Other banks are going to feel the heat when they have to go unload those as well. So I think that more banks are going to feel it. Another thing, how does that affect interest rates? Does the Fed continue to raise interest rates? All right. Does the Fed continue? I don't want that story anymore. Does the Fed continue to raise interest rates based on the bond issue? The probability of Fed no rate hike shot up as high as 65%. No rate hike. I need that to settle in for a second because that's huge. Let me go back to the market timing graph real quick. Because I got a video for next week talking about the three movers of the market. If we look at the market climate graph, there's inflation. It's peaked, it's pulling back. The pullback lets me know that what the Fed is doing is affecting inflation. But hold on a second. How bad is inflation? This is 27 years worth of data. Since VectorVest has been around, inflation is at the highest point it's ever been. Oops. Let me show you something else. Okay. And this is why we have to talk about this. The last peak we had was during the housing crisis, in between the housing crisis and 2010. Look at that. Look at that rate of inflation. Look at the rate of inflation we had, even though it's pulled back, but over 27 years, folks. Inflation's a problem. So if we try to put ourselves into the Fed's shoes, he's raising interest rates. Those are my T notes. Earnings per share on companies are starting to be affected adversely. Does he keep raising to bring this down faster? Or does he pause to see the effects of what he's already done? Does everybody understand what I just said? All right. Does everybody in the room understand what I just said? Because this is some important stuff right here. This is important because this is how you're going to know what to do in your portfolios or not. Inflation is still super high. If he pauses, the job market is not participating. We're still finding jobs. A couple of weeks ago, we found 500,000 jobs. 500,000 people got jobs. This most recent report, 311,000 people found jobs. If they're getting jobs, they're making money, they're putting it into the economy. They've got more money to spend. The economy is growing. But for the most part, the economy is shrinking. It is taking money out of the market. The Fed is walking a tight rope. Now, my thinking is changing a little bit because with these other banks out there that have got the bonds, do you continue to raise the rates that affect those bonds? Yes or no? Type it in the room. That's an honest question. From the inflationary perspective, being high, the highest it's been over the last 27 years, according to VectorVest. Do you continue to raise rates that's going to affect what all those bonds that a lot of these smaller banks bought into? What did Dan say? Since we're talking about market to market versus held to maturity, let's not ignore the elephant in the room. The Fed's own balance sheet, that is currently over. Now, that's another story. When does the Fed dump the stuff that they have? Well, why are they still holding it? That's another tool that they can utilize in helping to control inflation. But the main tool that they are utilizing right now is the raising of the interest rate. The banks need to have hedged their investments. Well, listen, Doug, I sort of kind of understand what the banks did. If I'm buying the debt, I'm buying bonds. I just let them mature, and I should get my money back with a small little interest, and it should be a safe, and there's the key word, Doug, it should be a safe investment. For the most part, that kind of technique makes sense. But it hurts when we get into inflationary time periods. Oh, could we have done a better job of protecting ourselves through here? Absolutely. When could we have done that? Oh, when we were saying that this all was transitory. As it was going parabolically high, oh, it's transitory. We could have stopped this a lot earlier or stemmed it off a lot earlier had we not taken that approach. All right. So Marty says, wow, good question. I guess yes. That's a tough question that I asked. That is truly a tough question. Do you hurt the bonds by still raising the rates? Or are we still raising the rates to accommodate very high inflation? Ravi says yes, because if interest rates hikes are put on pause, we risk another round of inflationary pressure, thus needing another round of hikes. So now, riddle me this. Do we pause the rates and just kick the can down the line to just take us all back through this again? And then do we just pause again later in time to kick the can down the road? And I think that if we pause, we're going to set ourselves up for a vicious cycle that's going to take forever to get out. Does anybody agree with that? Type of 1 in the room if you agree with that. Type of 2 if you don't agree. That if we pause, that we are just setting ourselves up for a vicious cycle for I don't know how long. I know that we've got to go through some hurt. We ain't felt the hurt yet, folks. We think we have. We ain't felt it yet. Jeff says, yes, Glenn, no rate increase next week. He will pause as we will have stress in the bank system. It's not just SIVB. The Fed will not get back to 2% for quite some time. The problem is with that, Jeff, he is adamant. He is adamant about that 2%. He doesn't want to move off of that. Chris says, I don't have the education to even guess. I just stick to what VectorVest tells me to do. Chris, I'm with you as well. Don't get me wrong, Chris. I'm not an economist. I'm posing questions in regards to what's going on. Because I think that as investors, we need to position ourselves in a place that we make the best decisions we can. Does that make sense to you, Chris? Oh, I'm not an economist. I'm not anybody on CNBC telling you this, that, or the other thing. That's not what I do. But I use the power of the VectorVest software to look at what's going on in the market, to track the 30,000-foot view in this market climate that we have, to look at interest, inflation, and earnings. And from that, I can say what we need to do on paper. Michael says the Fed can't fix this. It should come from government policies. What kind of policies? Less spending? Less spending? We know that that's what we should be doing. We've known that for the past 5 presidents. That's what we should be doing. But we keep still finding a way. Now, the last big infusion of money into the economy was due to COVID. We put a lot of money in a lot of people's pockets. I think it was all done for the right reasons. Don't get me wrong. I think it was all done for the right reasons. But folks, Look at this market. Here's the earnings per share on the S&P 500. Look at the run after 2008, the housing bubble. Look at the infusion of capital. How do we infuse it? We lowered interest rates. Look at the infusion of capital to make the market run robustly. We were robust for, 10 years? What do you think the outcome of that is going to be? Well, I can tell you because we're going through it. Higher prices. That's exactly what we're going on. So Fitz, what did you say? Fitz says government policy spending is the fuel inflation fire. I don't disagree with that. Less spending, add more supplies like energy. I don't disagree with that. Oh, but wait. That all makes sense, doesn't it? But we're also in a political machine. Oh, no. And I'm not going after the left or the right. I'm just going right straight down the middle, being fiscally responsible. We keep spending more money than we take in. I don't care who the president is. We just keep doing it. So yeah, less spending, more supplies like energy to make us energy independent. All of that makes way too much sense. But then we get political infighting that affects what we do and how we do, and it jacks us all up. We ain't got nothing to say about it. Well, we do. We can vote. But man, these are the conversations that we got to have. And again, I don't like to have the political conversations here, but I don't need to. When I can simply look and see that with the rising earnings, what do you think was going to happen? And when it started happening, we blew it off. It's transitory. Big mistake. The Fed has had to walk that back. To what purpose? We're still screwed. All right. The infusion was planned, intentional. It was. But Tony, I think a lot of the infusion was well warranted during COVID. Since then, or before then or after then, I don't know. All right, so fiscally responsible, no comprende. I hear you, Fitz. I hear you. So Glenn, what's the bottom line? So now, let's go back to the news because I think, I was already in it. The bottom line is the market's going to go into this little channel back and forth to the downside, but in a channel until the Fed makes a decision. I think the only way, now I'm putting my opinion into it, Fitz. I think the only way the market goes up from this point is if the Fed does pause. I think we need a 50 basis point hike. I think he needs to move his terminal rate from 5% to 6 or 7%. But he won't say that because that will be an alarm. That will be an alarm for people to panic. He doesn't want to do that. But I think deep down inside, he realizes he needs to do that. With the banks going through what they're going through right now, I think that he looks at it as insensitive to what's going on in the market to raise interest rates. The bottom line is, with the bank's bleakness coming into the picture, I think that he pauses. I hate to have to say that. But there's a lot more banks that haven't sold back their bonds yet that are in the same boat that SVB was in. All right? So that's my take on it. That's my twist on it. And that's all I got to say about it. That's all I got to say. If so, only temporarily. Oh, yeah. Oh, it's not going to be a long pause. I think that it will be a pause to get the banks back in order? And Richard asks a good question, but will pausing stop the bank failures? No. But I think raising exacerbates the bank failures, Richard. I think that the raising even 25 basis point exacerbates the bank failures. Does that make sense, Richard? What you care, you're going to be on the beach. Well, I still can't. Wow. That was, hold on. No. That's so wrong. Does anybody agree with Alberto that I don't care, I'm going to be on the beach? Type a yes if you agree with Alberto. Type a no if you think I truly care. Type a 2 if you think I really care. Wow. Alberto Fitz says no, but funny. Alberto just went straight for the juggler. What do you care? You're going to be on the beach. Listen, I care. Why do you think that I'm going this far into this topic? Why do you think that I'm willing to lose people watching this to get into this topic? We didn't get to 300. I'm still trying to get to 300. Actually, we pulled back a little bit, trying to get to 300. I'm trying very hard to prepare you for next week, what to look at, to give you some guidance as to what's going on in the Fed's mind. I ain't the Fed, but the stuff that I see, the stuff that we all see, we can sort of kind of map out what may or may not happen. I guess rates go up 25 basis point. Europe lower rates, dollar gets stronger, says Shopper. And this is why I'm not ready. I'm still not ready to take on gold yet. The dollar's still strong. Not many likes for over 200 people. I agree. Listen, if you think that this conversation is well worth having, hit the like button. Hit the like button. If you honestly feel that this conversation is well worth having, hit that like button. If you're not a subscriber to the channel as well, hit the subscribe button. All right. What day does the Fed reveal their decision? The 22nd. All right. It's going to be March 22nd. All right. So, all right. Other stuff. Instant view banking stocks tank again as Credit Suisse woes rocks the market. Credit Suisse took a fresh beating on Wednesday as Credit Suisse shares slid to a new record low. Not just go lower, it went to a new record low as its largest investors said it could not provide the Swiss bank with more financial assistance. It's a Saudi run, right? It's a Saudi run dealie. The Saudi National Bank cannot give more money to Credit Suisse as it cannot go above 10% ownership due to regulatory issue. No matter what you think about his irresponsible beach visits, Glenn does a lot of work for us. Wow, my irresponsible. Wow, Mark. My irresponsible beach visits? Irresponsible. Bro, I'm going to be on vacation. I'm going to love you all. And I can't even do anything while we're on the boat. Janet's the only one that paid for internet. So she's going to be the only one that has internet. I ain't going to have no internet. Not me. So, sorry. Gonna have to wait till I come back. Mark says, sorry, should have said ill time. John says, CS has been laying off in New York City for some time. I know someone who got laid off with over 20 years of working. That sucks. CS has been going down for a year. The man needs some time with Janet. Absolutely, Fitz. You tell him. I do. But will they let Credit Suisse fail? That's a good question, Larry. Does anybody think Credit Suisse is too big to fail? Oh, remember, and you can type a 1 or a 2. 1 if you think it's too big to fail. 2 if no. I'm gonna say something about what we said, calling what happened to SVB a bailout. I still say it wasn't a bailout because they didn't go to protect the company. They went to protect the depositors, the people who put money into the bank. So I don't call it a bailout. A lot of people disagree with me in regards to that. Some people are saying, it was a bailout. They backstopped But now it does set up a precedent that if another company like SVB goes through the same thing, will they backstop the people who put the money in there as well? Interesting. It does set a precedent. All right, so all of these stories I'm talking about today are primarily about getting prepared for the Fed. Here's my story. Government bonds held at banks may be so-called toxic asset of the next financial crisis. So now there's another way of looking at that. Does the Fed just keep raising interest rates and now we get ready for the next financial crisis? Does he want to be the owner of the next financial crisis? Because he will. Well, Mr. Fed, you kept raising interest rates knowing that these bond issues were a problem. You kept raising it. You caused the next financial crisis. Whoo. Do I want to be the Fed that's tagged that way? I doubt it. I don't want to be the Fed that's tagged that way. But the Fed could turn around and say, listen, inflation may be getting better, but it's still freaking high. Do we want a rebound in the market? Whew. That's why, Glenn, banks have FDI insurance. A SIF. That's a great point. But how many multi-million-dollar companies put all their money into one bank? It's an easier way to do business. I'm insured up to $250,000. So if I'm a $2 million company, I got to put my money into 8 banks? So a SIF, it's easy to say that they're FDIC protected. But if I'm a business, do I really want to spread my money through 8 banks to make sure my money is protected? Think about that, right? I said, I'm with you. They are protected, but only up to $250,000. All right? They protected depositors with more than $250,000. Absolutely, Richard. So they did a backstop. They did a backstop. I don't call it a bailout because they didn't bail out the company. They protected the people who had no choice in this. They didn't make it. So now what does it do? What does it do for me as a company? Do I start thinking about spreading out my money amongst all of those banks to make sure my money is protected? Whew. David says it might be easier, but it's also riskier given the FDIC limits. Businesses may not want to, but they won't. But they took the risk. It's easy to say that too, David. Man, if I'm a business and my DJ business is a $2 million business. Do I really want to spread my money against 8 banks in order to be protected? I don't know. Tuan says, big fan, sir, from India. Thank you, Tuan, for being here. Kim says, Glenn, you're correct. It was not a bailout. I don't think it was a bailout, but a lot of people in here do think it was. Buy real estate. You know how long I've heard people say buy real estate? Forever? That's like buy real estate. I got some real estate. It's just chilling. I don't know. All right. I think you can buy your own insurance. Larry, if that's the case, then you know something, I would then put all my money into one bank and buy. I don't know how expensive it is to do that. It is a bailout no matter how you look at it, says Lee. I disagree. I sort of kind of disagree. All right. More stories. Why Ray Dalio says SVB collapses, canary in the coal mine. I think we just beat the hell out of the story. I think we just did. So, how many of you doing Bitcoin? This is news. I didn't want to have to put up the story, but Bitcoin is already up 50% this year, beating stocks and gold. How many of you are willing to back up the truck and start buying Bitcoin again? Type of 1. How many of you are already in Bitcoin and doing well? Type of 2. How many of you want to stay the heck away from Bitcoin? Type of 3. 1, 2, or 3. I'm with you, Dolly. I think it's still a toxic space. And I'm figuring I'm going to probably see a lot of 3s in the room. I'm not a fan of it, but I wanted to bring the story up. I don't want to be biased to just... I'm not a fan of Bitcoin. But I'm going to still bring the story up if it's making the news so that you guys can take a look at it. I'm not ready to touch it. Some of you are still making money in it. I hear you. And that's fine. That's fine. If you have the time, can you look at ANF? I'm going to see what time we at. Man, I don't know if I'm going to look at your stocks today. I spent a lot of money. Yeah, and Ravi is right. It is better to have polls than to flood the chat. And Joey's been trying to get me to give him poll questions, but I'm probably going to have to do what we've been doing, start doing these polls on the fly instead of trying to prepare them. I think that's probably the better way to go. I'm not going to look at your stocks today. I got about 5 minutes left, Ravi. I got about 5 minutes left, so I'm not going to look at your stocks today. All right. What else is in here? Diamond Sports, largest owner of regional sports network, files for bankruptcy. The company, which airs local NBA, NHL, and MLB games across the country, said it plans to restructure its more than $8 billion in debt. That's big. Shaikh says, sir, I'm from India today. Dow Jones market in positive territory or negative territory. Please answer me. I got you, Shaikh. We'll take a look. And actually, I got a couple other stories, but I can look at the software right now and see where we stand. Where's my homepage? There it is. I can look at that real quick. The Dow, everything is in negative territory, Shaikh. Shake, that's probably the better way for me to say that. Shake. All of the indices are still in negative territory today. The Dow is down. All right. I don't want to minimize that. I want to keep that. All right. So that's a big story. Morgan Stanley is testing an open AI-powered chatbot for its 16,000 financial advisors. What are they going to say in that chatbot for the financial folks? Morgan Stanley is rolling out an advanced chatbot powered by OpenAI. Who else has got the investment in OpenAI? Microsoft. $11 billion investment in OpenAI because it's still a private company. Latest technology to help the bank's army of financial advisors. How? Artificial intelligence tool with 300 advisors and plans to roll it out widely in the coming months, according to Jeff McMillan. The idea behind the tool, which has been in development for the past year, is to help the bank's 16,000 or so advisors tap the bank's enormous repository of research data, said McMillan. Ooh. Interesting. So that's two companies on now with OpenAI, Microsoft and Morgan Stanley. How about this? Open ChatGPT, GPT-4. Morgan Stanley, one of the first. We just talked about that, right? These two stories together. They've now got GPT-4. I don't know much about it yet. Among the other things, GPT-4 surpasses its widely known ChatGPT app and provides safer, more useful responses using human feedback, including from users, to improve the AI's behavior. All right, Microsoft. Hey, Craig, glad you're here for the live, my friend. Glad you're here for the live. Sir, is there any chance that the Dow Jones recover or not? Absolutely. And nothing's going to die forever to it. It's going to recover. There's no ifs, ands, or buts about it. Do we have more room to the downside or consolidating in this lower region of the market? Absolutely. At least until the Fed talks and gives its decision on interest rates. All right. AVGO is a good AI stock. We've got a couple of videos up on AI as well. I love the AI space. Charbel says, would you stay in energy at this time? No. I think the warmer than expected winter, I know, and with us flooding the market with oil by way of our reserves, the answer, Charbel, not yet. I wouldn't stay in it right now. There's going to be a time for it. I don't think it is right now. I don't think it is for right now. Small banks hold about a third of the U.S. deposits, of which around 50% is uninsured. Really? If SVB depositors get a haircut, less than all their money's back. Wow. Yes, it is, John. I talked about that at the beginning of both the BSR and the MTI. Do you still have the AI stock? I do not. I'm only holding 2 stocks long. AI is not one of them right now. I've got 2 stocks long and I've got 3 contras. That's what I've got in my portfolio right now. And my last story, Samsung to spend $228 billion on the world's largest chip factory. Woo! As part of its South Korea tech plan. Can't trade it. Roger, are you here? He sent me a tweet. He says, too bad we can't trade it in the U.S. Can't, but to invest 300 trillion Korean won, about $228 billion, in a new semiconductor complex in South Korea. So it's not coming to the United States, but it is being built outside of China, which is huge. Which is being built outside of China, which is huge. That'll help with the supply. That'll definitely help with the supply. All right, so now let's take a look at these stocks. It's the last thing I'm going to do before we go. Let's take a look at these stocks. Right now in the semiconductor space, I'm kind of poised. Right now, let's go stream this. Where we stand, SOXL pulled back. Let's talk about all of these. Taiwan Semi, I like that because of the Samsung story. Microsoft because of the AI story. Coin because of the crypto story. AI as far as the AI story as well with Microsoft. And the regional banks that came back yesterday, which, you know, I can't say I was surprised. I was sort of kind of surprised at the rate of which it rebounded yesterday. But I'm like, yo, I know it got hit. And then it just turned around and said, hello, we're back. And I'm like, what? No, you're not. The other shoe hasn't fallen yet, folks. I don't think a lot of people realize that the other shoe on these regional banks haven't fallen yet. The other shoe hasn't dropped. The other shoe hasn't dropped. Beware. Remember that Glenn said that. In regards to these regional banks, the other deal hasn't dropped yet. I asked ChatGPT if it were a character in Alice in Wonderland story, which it might be. It said it might be the Cheshire Cat. The Cheshire Cat is known for its mischievousness and trickery. Ooh. That is a tough side of the space, is the validity of the responses. That's very telling, shopper. I use ChatGPT for a lot of little things here. That's very telling. Glenn, Signature Bank is all over the Metro New York City area. That is a huge problem. Did you see their webpage? No, but I did. When I came in and did my live stream on Monday, I talked about a second bank was shut down by the Fed. It was Signature Bank in New York. I saw that prior to coming in to work on Monday, so I did talk about it. Sir, I'm inviting you to please visit India. Well, we'll see. And I appreciate I appreciate the invite. I do. Thank you for that. I do. All right. Let's go take a look at all of these real quick before we go. All right, let's take a look. Let's put these all in 3-month graphs. Taiwan Semi is from the chip space. I like it. Undervalued. Watch the earnings per share. Below the 20-day exponential moving average. Would I jump on it now? No. I'd like to see it jump above the 20-day exponential moving average. Number one. Number two, I'm watching the earnings per share. They got to make some money. The dividend is jumping up. That's going to make it more attractive for people to jump on board with the stock. All right. These are 3-month graphs. SOXL. This is on the semiconductor, bouncing off a level of support. I'd like to see it go above that 20-day exponential moving average. Actually, it's trending lower from the high. I'd like to see the trend line be broken along with going above the 20-day exponential moving average. Microsoft, man, I still like that Microsoft put that big investment on OpenAI. I think it's going to have some rooms to run. I broke through 2 levels of resistance. It's got a third, which is sitting at the 3-month high. Love the earnings per share. I like Microsoft. I'd really like to wait for confirmation to break above that 3-month high, but would you buy it now? You could. It is above the 20-day and earnings looks good. The stock is overvalued, though. That just means people are willing to pay a premium to own it. Coin is showing me some signs, some technical signs. Bouncing off a level of support, getting above the 20-day exponential moving average. Watch the wick at the top of the candle. I don't like the earnings. And I'm probably going to not like the earnings on many of these crypto stocks right now. If I really want some confirmation, let me see it take out that 3-month high. Glenn, are you now using 20 days as a filter for buy decisions? Fitz, I'm looking at longer, trying to look at to see if any of these are longer term plays. My 3 and 8 is used for the shorter term plays. But as I'm looking at these stories, I want to see if they have any validity for being played long term, that the news could be pushing them higher. Does that make sense, Fitz? All right, that's why I'm looking at them with a 20-day. Woof. AI ran, found a level of support, ran some more, right back to support. When it was running, it was rocking. Now it's a little bit more volatile, back and forth. And watch the earnings per share. Would I be in it now? No. Would I wait to go above the 20-day? Yes. But I also know I have a price target of the 3-month high. All right, hopefully that makes sense to everybody. I'm going to run my low RT NASDAQ 100 scan on this bottom when it turns. You know something? The only way we get a real bottom fishing move, John, is if the Fed pauses or only does a quarter basis point. Other than that, I don't think we get a bottom fishing move. Kurt says, let those banks fail. John Kennedy, why wouldn't you hedge the other side of securities? I'm agreeing. Do you really let them fail? They did the right thing. They sort of kind of did the right thing of buying the bonds, buying the debt at low interest rates. I don't see where they did a bad thing. Maybe they could have put on more protection. I could go for that. But they didn't. Does anybody feel that those banks were irresponsible? All right. Type of 1 in the room if you thought they were irresponsible. Type of 2 if you think they did the right thing. They get caught on the wrong side of what was going on in the market. All right. I don't think that they did. I don't think that they did a bad thing. And, you know, maybe a lot of people are typing 1s. You think it was a bad thing to buy bonds? A safe investment at low interest? You think that it was a bad thing? EWY for Samsung exposure in the U.S. Thank you, Craig. I didn't know that. EWY. Thank you, Craig. Yes, why buy a bond when it pays nothing? Because it does pay something. It pays a little bit of something. It's a safe investment, Lee. All right. Charbel says they should be smarter than that. They didn't match the time of the bonds. All right. They should have bought shorter duration bonds. Wow. All right. So maybe that should change on my mind a little bit. All right. Did not consider the time horizon on the longer durations. It's banks, governments, and the Fed's fault. KRE is going to be a nice buy. Yes, I think it's going to be a nice buy, especially with these banks. And that's the last of the stocks. All right. I was a little longer than I wanted to be, but I think, again, today was a conversation that we needed to have. I got another live stream tomorrow. I've got Trending Thursday. I don't think we're going to do what we did for the last 2 streams. I think we're going to be looking at stocks and all that kind of thing. But I think these last 2 conversations were something that was needed. All right. I got 91 likes. Let's hit the like button if you felt. Look, the like button tells me that it was worth it for you to come here today. That it was worth it for you to spend a little bit of time with me today. That it wasn't a waste of your time. That's all. That it wasn't a waste of your time. All right. And we'll go from there. Remember, tomorrow is going to be my last stream for about a week. We've got Trending Thursday tomorrow, and then I'm gone. I'm gone. We do not have any lives. We got 1 live stream next week. That's Steve Chappell for Trending Thursday. I am recording the videos for the 6 p.m. videos for next week already. It's going to be very educational. Very educational. Keep a jet ski in your cabin just in case and have fun. I miss you already. Thank you, Badger. I'm going to be here tomorrow. I got a live stream tomorrow. This is always a great stream. Thank you, John. Thank you, Glenn. Thank you, Joey. There you go. All right. I got to go. Have a great day. I'll see you tomorrow for Training Thursday. Don't forget, Patrick will be on at 11 o'clock for the mobile app training as well. All right. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Konnichiwa? I don't know what to say except for aloha. I can say aloha. Bom dia. Salam, shalom, namaste. Yasu train. Until the next time, folks, see ya.